Credit is something that is a huge determining factor when you're getting a mortgage. It impacts the type of mortgage you can get approved for, and it also impacts your interest rate significantly. So, paying close attention to your credit score and managing your credit report is a very important thing to work on consistently and to make a priority. Now, a couple of things that tend to have a negative impact on your credit score are your utilization rate on your credit cards. To simplify it, utilization rate is just a percentage of how much of your credit line you're using. So let's just use some simple numbers. If you have a credit card that has a $1,000 credit line and you have used $500 of that $1,000, now you're at a 50% utilization rate. If you have used $800 of it, now you're at 80%. If you've used $950 of it, you're close to maxing it out now. Now you're at 95% utilization rate. So when your credit report is being analyzed, when it gets run, if your credit cards are running at high utilization rates, right? The message that you're sending to the algorithm is that you're depending on your credit card. So then it hurts your credit score. So one of the things that you can do in order to boost your credit score is to bring down your utilization rate, especially if you have cards that have low credit lines and low balances. Just focus on bringing down those utilization rates. Try to keep them under 20%. So under 20% in the same scenario would just mean if the card has a $1,000 credit line, $200 balance, now you're at a 20% utilization rate. Sometimes it can work to your advantage to bring it down to zero and just kind of treat it like an Amex. You use it, pay it off. Use it, pay it off. But the thing you want to try to avoid is running high balances on your credit cards. That is going to have a very negative impact on your credit score. The other thing that can negatively impact your credit score is when you have a lot of accounts in the derogatory account section. This is where you have collection accounts. This is where you have charge-off accounts, and not a lot of accounts in the active section. So just try to think about it like a game of tug of war, where on each side of the rope, you have a group of participants pulling in one direction and another group of participants pulling in the other direction. Okay, so now imagine your derogatory section of your credit report as one group of people pulling in one direction. And then now on the active side, you have another group of people pulling in the other direction, right? Now, let's say on the active side, you have a bunch of low utilization rate cards where you have the credit lines, but you're not really using a lot of your credit line. Now you have really strong participants pulling on that side of the rope, and you don't have 30-day lates, 60-day lates, 90-day lates. All of your accounts are in good standing. You have multiple accounts. Now you have a group of participants that are very strong pulling on that side of the rope. In the derogatory account section now, let's say you have multiple charge-offs, a repossessed vehicle, okay, and you're not dealing with those things. Now what you've done is strengthen the participants on that side of the rope. Now each month when these different creditors report, those negative hits keep happening over and over again on your credit report. Once you start to resolve these issues, for example, let's say you have a credit card that went into default. Now it's in collections and it's just sitting there with a $500 balance. Call the company that is handling that debt and try to make a settlement with them. Sometimes they'll take a pretty low settlement. Give it a shot. Just make them an offer, have a conversation, explain to them what's going on. If you want to hire a company to handle these things for you, you can do that. But I just want to make sure that I'm empowering you to let you know that this is something that you can take matters into your own hands and do for yourself as well. All right. You can call them up, work on a settlement. You can even get a payment plan done, especially for credit cards, because you have to imagine it this way. Why would another credit card company want to extend you credit if you have not resolved the issue that you have with another credit card company? So once you've resolved that issue with the other credit card company, you will start to notice very shortly afterwards when you've taken care of any unresolved issues as far as collections and charge-offs or credit card companies, now you will be extended more credit, because now you've proven that you, even though you defaulted, even though you're in collection, even though you charged off, you still came back and resolved the issue. Even if it was for a percentage of what was owed, it's just a part of the process. You still resolved it. Now you get to come back again and do it all over again. So just try to think about your credit report as being very malleable like that. It's not something to be afraid of. It's very logical, okay? And if you do a really, really good job of managing it, you will be rewarded with lower interest rates, and it will open up things for you to get more access to capital. And when you're dealing with real estate, for example, it'll open up different types of mortgages. So it benefits you to put that work into your credit report and make sure you're doing a great job of managing your accounts, keeping your credit report as clean as possible, keep those utilization rates down. Okay, and just do a really, really great job of managing your credit. There's a lot of other things that you can do as well, right? And, if you feel that it's more in your best interest to communicate with someone that deals with credit repair and helping you to really optimize that credit score and clean things up, you can do that as well. But you also have the power to do it yourself. You can get a free account with Experian.com. And they can you can just have your credit monitored, and you can do things like this on there. You can challenge things if you want to challenge something, if you feel like the account doesn't belong to you, or you feel like it's reporting incorrectly. If you have the evidence, you can absolutely challenge it. If it is truly your account, then it may be something that you have to make that phone call and deal with it and see if you can come to some type of a settlement, some type of agreement to get the issue resolved, so you can move forward and rebuild your credit, or just take your credit to the next tier up, and just keep pushing yourself to excellence. Don't settle for, okay, I'm at a 680, get to 700. If you're at a 700, get to 720. You're at a 720, get to 740, and keep pushing it and pushing it, because you're going to just make things better and better for yourself the higher your credit score is.